so just recapping the notable events we've seen this week, let's start off in the UK with the pound. As we noted at the beginning of the week, it was losing momentum and we have seen it hard hit across the board. Not one particular catalyst, but a few reasons just to be wary of. PMIs in the UK were very much less than impressive, and it just shows there is an economic slowdown at the moment in the UK, and obviously with the Brexit uncertainty as well, that's not helping the picture at the moment for the country. And then the Bank of England are still indicating that they want to go and raise rates by the end of 2017. Each to their own. Elsewhere, we also had PM May. She's coming under pressure from her fellow MPs after her press conference. They were not impressed, and essentially there were some reports in UK press, The Telegraph, suggesting that the PM could step down as early as the end of the year, which is just promoting some political instability once again for the UK. Looking, as we've seen quite a large sell-off for the pound across the board, if we're looking specifically at one of the hot pairs, cable or sterling dollar, we could see a potential pullback around the 128 to 129 zone. So just keep an eye on that area for a potential, just brief bit of consolidation before any potential further moves south. Looking over in the United States, then the dollar has most certainly gained some ground once again, really gathering some pace. Just to note, we did see quite decent data with firm ADP, employment change, heading into non-farm payrolls, and two, ISM non-manufacturing PMI, both good bits of data that did help the dollar bolster across the board. And then also we had some commentary out of Fed's Williams. Now, why I say this is key, because he's going to be a voter for next year, and as we know, a lot of markets are anticipating hikes for 2018. He said further hikes are appropriate, so that did help the dollar also across the board. And if we look specifically at the dollar index, guys, obviously there was a couple of weeks ago, we were in a period of or path of falling for the dollar, and we have now reclaimed that 94 area, so 94.00 for the dollar index. And I was just looking, we've firmly cleared a zone that was initially seen as a demand zone when it was underneath that, but now we've passed through that resistance and we're at 94, and there could be some further upside to come for that, which consequently for your other currencies against the dollar means they could continue to drift lower themselves. Over in Europe then, the euro has been weighed upon and been softer across the board against other currencies. Now, there has been some political instability in Spain. Now, I'll tell you why, because the Catalonia region, excuse any mispronunciation there, but they are looking and really pushing hard for independence, so that has promoted some instability. We've seen a variety of Spanish assets really losing some value. If we look specifically at the stock market as well, has dropped quite considerably. Elsewhere then, in terms of ECB policymakers, they seem quite favourable of winding down of QE next year. That was coming out of the latest minute of their recent meeting. Now, that's not great, because a lot of the markets were hoping and anticipating that they do wind down their QE before the end of this year. However, and that was largely priced in from the second half of this year, and that doesn't look to be happening. So the euro is quite soft across the board. If we look specifically at the hot pair, euro dollar, now, we are sitting in a very firm demand zone that has been much respected for a bit of time now. A level to really keep an eye on that I've been looking at myself, in my view, is 116.70, roughly speaking. If we break that level, there could be a lot of downside to come for euro dollar. So do keep an eye on that, in my view, 116.70. Other than that, that's it from me, guys. I hope you've had a smashing trading week, and I look forward to reporting the key events next week. Thank you.